behalf of State Tax Department for the training program on tax deduction exchange. All of you know that GST was implemented in the year 2017, and in the erstwhile state of Jammu and Kashmir it was implemented on 8th of July 2017. So we were about 1 week behind the rest of India for implementation of this. But the tax deduction at source, which is governed by Section 51 of the CGST Act, it came into effect only on 13th of September 2018. So we can say that until 2018, Section 51 was kept in abeyance. Each and every branch business officer was not supposed to deduct the tax under this GST up to 13 September 2018. From 13 September 2018, Section 51 was invoked, and each and every branch business officer was supposed to deduct. Mute was that. So, after this notification, each and every joint disbursing officer who are responsible for making payment against any supply of service or goods, we have to keep in mind that GST has defined the supply as well as this supply in two categories: supply of goods or supply of services. Means that if you are purchasing any item, taxable item from any vendor, that is also considered to be a supply. If you are getting any service from a taxable person, that is also supply. So we can say that both the things comes under the definition of supply. So once we make payment against supply, Section 51 says that you are supposed to deduct tax, but we have to keep in mind that when to deduct tax, how much to deduct tax, and when not to deduct tax. And what happens if you are not deducting tax? And also we should also keep in mind that what happens if you deduct the tax but you fail to deposit the tax into the government account. And what do you mean by depositing the tax under government account? Share the slide. Before we should start, we should go through the slides. I would request our Additional Commissioner, Mr. Rajat Kumar, to please brief the audience about today's program. Sir. Am I audible?
Yes, sir.
So welcome you all. I think it's a really good strength here. I think many videos also are through BC also. We considering the huge strength of this videos, so we have planned for separate for Kargil and Leh. I think Kargil they have done already. There was a good response from their videos also. I couldn't attend there. So यहाँ पे I think now most of the rules are clear. It's almost streamlined. We have issued several instructions to all the DDOs. आपको कैसे TDS कैसे file करना है, and earlier how it used to be. So, and there is, I think last 6 months there was an issue with the JK Bank and with the PFMS. So because of which you could, what used to happen was that you used to take out the money from the PFMS, put it in your separate public account, and then transfer it to the, you used to file the TDS return. So that has also been sorted out. And now I think we don't have any issues with failure in TDS returns, failure in TDS ka this thing. There may be slight 1 or 2 issues which we found, that is mainly because of mismatch of amount. So there, I think rules are also clear. You may be knowing, for any value of goods, goods or services about 2.5 lakhs. So you need to you need to deduct a TDS of 2%, right? And that has to be filed within next month, 10th of the next month. and if you delay it, I think there would be a interest on that one, so that has to be paid, and that can't be paid from your office expenses or anything. So that has to be will be recovered from your own personal this thing, salaries or something. Okay. So this please may ensure. I have seen just took the report from the Treasury office also. What I could find out was that last month there was a receipt of around 1 crore 8 lakhs to our account. Normally you deposit under the suspense account 8658, right? So we have seen there is an accumulation of 1 crore 8 lakhs rupees for the last month, and that has to be paid back to the RBI. So by end of this, before 10th of this month. So what I could find today is 7th, and hardly 45 lakhs has been deposited. We have filed. So remaining, I even when I checked from the previous months also, what I could see was that there is a late filing also. I don't know how you are filing, how you are, how you are paying the interest. I don't know. That we will check it from the treasuries, and also we will ask them. So we will verify, we will cross check if it is being paid from the public this thing. Then I think we have to recover the amount from the DDO side. Okay. So I would request you, all of you, please file the TDS returns. Please generate the challan CPIN before 5th of the next month. Please keep some at least 1 week, in your hand. Suppose you file the TDS return, there may be a chances of failure. So that you will come to know through score data and this thing that may be communicated after 2-3 days. You at least you will get an option to refile it. I don't want to see the DDOs they are filing just on 10th or on 9th of this thing, and then start approaching to us saying that, sir, no, we have filed TDS before due date, but it got failure, and now we don't want to pay the late fee or the interest this thing. Okay. And we will issue a separate instruction to the treasury office also, just like we issued for the salary account. I believe now everyone are getting salary on 31st. Yes. Right? So, same thing, please ensure for this also. Don't go into this thinking that we have up to 10th tak hai, so we will file on 9th or 10th of this month. Right? There is no issue, no? For generating, you can generate even on 1st or even 2nd also. Right? So, because what happens is that, I'll just tell you that if you if you make a delay in TDS filing, that will also impact on our GST collection also. What happens is that, suppose if you delay for a month or a delay for 2 months, so accordingly the contractors or the service providers will get that much of time to file their returns. So they should have filed the returns before 1 or 2 months before. Just because DDOs they haven't filed it, they get that much of period for them. And you definitely for us it may be just hardly 2% of the amount, but for them it's a crores of rupees, right? If they delay for a month, that means they have already generated a profit of at least 6 to 7% on that one. I'm just giving you a picture, so you are actually indirectly you are benefiting the service provider or the FMS which is integrated up to the DDO level. And we presently also we can monitor your TDS filing and everything, because from our CAM reports we can generate how much DDO wise we can take out the details, whether you have filed for within that due date or not, how much you have collected the amount, how much you have kept this thing, everything we have. Okay. Only thing is that we are not able to take any action again on that one. So, but we thought of issuing a instruction to the treasury also. If there is a delay, then the late fee or whatever this. If there is a delay, then the late fee or whatever this thing that has to be will be collected from the BDO's salary or whatever. That would be collected from the BDO's salary or whatever. That we are thinking on that. Right? Please ensure filing the TDS returns before due date, and please let us know. I just want that suppose if you are finding any issues in filing the TDS returns, please let us know. We are here to resolve that one. Okay, there was the issue of failure in this thing that we sorted out through JK because they were doing the payment through NASH, which RBI didn't accept that one. So we have now made it clear. Now JK is doing through the NEFT or RTGS. So I think there is a what I got from last 1 or 2 months of this thing. Most of the videos they are giving the this thing that most of the transactions, जो file returns है, is all successful. Okay, even if you find any issues or this thing, please let us know. We will correct it, we will amend it, or we will take up the issue with the concerned authorities. Okay. Thank you so much.
Sir, my one suggestion is that some of the shopkeepers or suppliers are having composite GST. In that case, how we can recover it?
I think we would take the question and answer session after completing this discussion. And notice your question.
Composite GST.
Also, please raise your questions. Okay, this is a workshop. This should be a dialogue. This thing that whatever doubts, whatever you have. Okay, please free to ask that one. Get clarified. Okay, from your DDO level side or from your GST side, or whatever the seller point of whatever.
Thank you very much, sir. Each and every officer might have noted the instructions clearly from the Director of Finance. So, first of all, I would like to let you know that what is GST. The name itself signifies that goods and services tax. It's an indirect tax. We have two types of tax. Normally, one is direct tax and another is indirect tax. Direct tax, normally we know that direct tax is income tax. Each and everybody knows that income tax is direct tax. But I think we Ladakhis are fortunate enough that we are not required to pay the income tax presently. But so far as goods and services tax is concerned, each and everybody is supposed to pay that GST. Whether it is a limited company or a private vendor or maybe even a very small dealer or even a consumer, each and everybody is supposed to pay GST. So, what is GST? It is actually the indirect tax that is levied on supply of goods and services. But this GST does not include supply of alcohol for human consumption and petroleum products. Similarly, in GST, here are turnovers up to which the dealers are exempted from getting registered with the department and paying the tax also. Like if anybody who supplies up to an amount of 20 lakhs in a year, once we call about aggregate turnover, it means it is pen based or India based. So because we know that we have only single pen, each and everybody has a single pen, nobody has 2 or 3 pens, but we have single pen, and when we talk about aggregate turnover, it means that aggregate turnover is calculated on all India basis of a single pen. And for goods, it is 40 lakhs. For GST registration, PAN is compulsory. So far as DDOs are concerned, PAN is compulsory.
What about services?
Services, I have told that 20 lakhs is the threshold limit. If you are providing any services, simply service, you are providing simple service. That it means that you are exempted up to 20 lakhs from getting registered under the GST department and paying the taxes. But it doesn't mean that if you are getting voluntarily registered with the department, you are supposed to pay the tax at that time. There is no exemption for any person who is providing services or supplying goods if he is already registered with the department. He is supposed to pay the tax, he is supposed to collect the tax, and he is supposed to pay the tax also. Under GST, we have 3 different sorts of tax, but actually these are not different from each other, but it depends upon the type of transaction. Say for example, if somebody is purchasing a good from outside the Union Territory of Ladakh, then the seller will charge him IGST. Applicable amount of tax rate will be either 18%, 12%, depending upon the goods or services. If the supplier is registered within the territory of Ladakh, then he will be charging CGST and UTGST. Earlier we used to call it SGST because we were at that time part of Jammu and Kashmir state. Now we are a separate union territory and the union territory goods and services tax is applicable to us. Now who claims the taxes? Actually the CGST goes to the central government, SGST goes to the state government, and in case of UTGST it is one and the same thing because union territories are also governed by the central government. So the union territory tax also goes to the central government. In case IGST, it is being shared by the center and the state. Say if some goods attracts a tax rate of 18%, it means that 9% will go to the central government and 9% will go to the state government. So far as section 51 is concerned, each and every DDO should know that over which amount should DDO deduct the tax. I mean to say that section 51 says that you are supposed to deduct tax only when the supply is up to this more than 2.5 lakhs. Then what would be the definition for that amount? We call it taxable amount. Actually the taxable amount means that the amount over which the tax is being charged, not including the tax. Say for example, if a computer is sold for rupees 1 lakh and the tax rate is 18% and the supplier charges 18% over that 1 lakh, it means you are buying the computer from 1 lakh 18,000. In that case, 1 lakh is the taxable amount and 18,000 is the taxes, be it CGST, UTGST or IGST. Deductor, you yourself are the deductor. The person who is responsible for deducting the tax is called the deductor. And deductee means from whom you are deducting the tax. I am a supplier of goods. If I am a supplier of services, in both the cases I am termed as deductee because from my payment you are deducting the tax. These are the persons who are responsible for deducting tax. Department, establishment of state, central or government. I think every audience who are present here, they are covered under A part, most of them. Local authority, we have municipals, governmental agencies, or persons or category of person. It is not necessary that only these persons are responsible for deducting tax. Sometimes government may notify a particular category of person, these will be responsible for deducting tax. In that case, they will also automatically become responsible for tax deduction. Now the authorities, I already mentioned that in previous slide, who are the authorities that have been designated by the government as tax deducting authorities. Like any authority or any body or any organization that has been set up by the act of a parliament or the legislature, or any society established by the government, or any public sector undertaking. Because we have Indian Oil Corporation also registered with us. We have NHPC also registered with us. They are public sector undertaking and they are also responsible for deducting tax. Because many of the contractors are also providing services to NHPC, and NHPC at the time of making payment they do tax deduction. Now, what would be the rate of TDS? As I already told you that even what the directors are also told that once you are making the payment, you are supposed to deduct 2% of tax. But deduction under which head, it depends upon the type of transaction. Say if you are purchasing any goods or services from Jammu and Kashmir. Now Jammu and Kashmir is a separate union territory. The supplier in Jammu and Kashmir, he is supplying you, say, furnitures. At the time of making the payment, if the taxable amount is more than 2.5 lakhs, you are supposed to deduct 2% of IGST, Integrated Goods and Services Tax. IGST is levied in case when transaction is taking place between one state to another state, one UT to another UT, one UT to another state. In case of transaction that is taking place within the territory of Ladakh, since we are resident of Union Territory of Ladakh, we will be talking about Ladakh also. So, if any transaction that is taking place within the territory of Ladakh, that means in that case the supplier of services or the goods will be charging you SGST and UTGST. In that case, you are supposed to deduct 1% under SGST head, sorry, CGST head, and 1% under UTGST head. Value of supply on which the tax has to be deducted. As I already told you that section 51 has clearly specified that you are supposed to deduct tax on the taxable supply. But taxable supply doesn't include the taxes which are charged by the supplier. So, as an example, I already told that if the computer is bought for 1 lakh rupees and tax is being charged 18,000, then 1 lakh will be the taxable amount. In that case, you are not supposed to deduct the tax because the value of the supply is 1 lakh rupees. But when I talk about the value of supply, I mean to say that value of the supply included in whole contract. Say for example, if the contract is being executed for an amount of 10 lakhs rupees, and let us consider the taxable amount be 9 lakh rupees. Then at the time of making the payment, DDO found that he doesn't have that much of fund. He has only 1 lakh rupees of funds. Then is the DDO responsible for deducting the tax while making 1 lakh rupees payment? Yes, because the value of the contract is 10 lakh rupees. You are supposed to see the value of the contract, not the value of the amount which you are paying to the deductee. Once you deduct the tax, that tax amount has to be paid to the government. But government has given you 10 days time. Say if in any month you are deducting the tax up to the month last date of the month. Say for example, if you consider January as the month, you are making 3 to 4 payments to separate different contractors or different suppliers. At the end of the month, you found that you have deducted from 10 different, 4 or 5 different persons. In the next month, up to the 10th of next month, that means up to the 10th of February, you are supposed to file the return, pay the tax. Earlier it was necessary to issue the TDS. Now that has been exempted by the government. Earlier it was also a penal offence also, because if you are not issuing the TDS certificate. But now the issuance of TDS has been kept under silence. You are supposed to only file the return by the end of by the 10th of next month. Now an important question is each and every DDO competent enough to deduct the tax? क्या है रे? Only those DDOs who are registered. It means, first of all, government has said that while making payment more than 2.5 lakhs, DDO should deduct the tax. It means under GST, registration as a tax deductor has been made mandatory. It means because each and every department must be making any payment up to the limit of 2.5 lakhs. So each and every DDO is responsible for getting himself registered with the department. For registration, you need TAN or PAN. If the PAN is in the name of the department, you can also apply on the PAN also. These are some of the procedural compliances which the DDO should follow. First, he or she should get registered with the department. For that, registration TAN or PAN is mandatory, and there are certain other documents also, like the photograph of the drawing disbursing officer, a PAN card of the drawing disbursing officer, and address proof of the office. These are the important information that has to be submitted on the common portal for getting registered. Now the second part is, while making the payment, you are supposed to deduct the tax. Deduction of the tax is also important. These also has to be complied. Number 2 is that when the TDS has been made, you are supposed to deposit the TDS within the stipulated time period. And for depositing doesn't mean that you are simply getting the amount transferred from the PFNS into the GST account. That has to be liquidated. That has to be paid into the RBI account. Then you are supposed to file the GSTR 7. Now, I have also mentioned here, they need to issue a certificate in Form 7A. Earlier, it was mandatory to issue GSTR 7A. Actually, it was the TDS certificate. DDOs who were deducting tax in pre-GST era, they must be knowing that earlier they were issuing a certificate ST60, on which the taxable amount was also mentioned and amount of tax was also mentioned there, and the treasury voucher number under which the amount has been deposited into the government treasury, that was also required to be mentioned. But now in GST, it was earlier mandatory, but it is not mandatory now. The DDO should also keep in mind that he should not make